It's been a big week for earnings from the media sector. Yesterday, we heard from Viacom, and in less than an hour, we'll get numbers from Time Warner. Aside from more details on its plan for AOL, investors are eager to know what the company plans to do with all that cash. John Ehrlichman has that story. He's at our markets desk. John, good morning.
Hey, good morning to you, Allison. And just to compare it to the Viacom story, remember yesterday we got better than expected bottom line performance from Viacom, a penny better than expected, but the revenue number fell short. Now, in the case of Time Warner, the expectations are that we will see lower profit. 37 cents a share is the current estimate. The revenue number, however, expected to be about $7 billion. Certainly we'll want to know how the cable networks business is doing and the film and entertainment business is doing. But you're absolutely right about that cash pile. They got a huge amount of cash from the spinoff of Time Warner, more than $9 billion from that. And yes, there are some cash commitments right now, and whatever ends up happening specifically with AOL will result in the loss of a cash cow. But analysts we've been speaking to over the past couple of days point to a couple of areas where we could see some of that cash spent. Acquisitions is one, potentially in the cable networks area, because we know as far as internet deals, the one they did with Bebo got some bad press, so they'll be a little more cautious perhaps on the internet-related deals, but also stock buybacks, something Pally Capital recently was talking about, and citing specifically this company's leverage ratio. Now, Time Warner CFO recently said their target leverage ratio, that's the debt-to-equity ratio, is around 2.5 times. At the end of the first quarter, it was just over 1.5 times. And Allison, the theory goes, as your earnings or your EBITDA earnings grow, and that is expected on the street for 2010, you can take on more debt. And one of the possibilities of how you use that debt, stock buybacks. I'll send it back to you.
Okay, Bloomberg's John Ehrlichman, thanks.